welcome to my channel today, The King's Tutor. The first time you join us, thank you for clicking to this. Ensure you like, comment, share, and subscribe to our channel. Now, today I want to see a question on manufacturing account. We've seen various videos on this. If you have not checked the introduction video, please check it up here. You're going to see the introduction video. Watch that before this, okay? Now, this question said, Grape Enterprises makes fruit juice. The following information relates to the year ended 31st December 2009. And we have stock 1st January 2009, raw materials 336,500. We have work in progress 60,000, finished goods 350,000, purchase of raw materials 950,000, sales 6 million, office salaries 315,000, carriage inwards 78,500, royalties 450,000, direct factory wages 125,000, discount allowed 20,000, indirect wages 225,000, insurance of factory 250,000, general expenses 300,000, depreciation of plant 310,000, delivery van expenses 62,000, office expenses 300,000, advertisement 65,000. Then it says stock at 31st December 2009, raw materials 245,000, work in progress 47,500, finished goods 285,000. Additional information: 1/2 of general expenses relates to the factory. 1/3 of the office expenses should be treated as factory cost. Okay, so it said you're required to prepare manufacturing, trading, and profit and loss account as the year ended 31st December 2009. Okay, so let's see a question. Let's see how to solve this question. Okay, so let's treat the additional information first. They said 1/2 of the general expenses relates to factory. Now this is general expenses. So they said 1/2 relates to the factory. So if we have the first one, the general expenses. So they said 1/2. So we have 1/2 times general expenses is 300,000. 300,000. So this will give us 150,000. So they said 150,000 is for factory. So it means the remaining 150,000. The remaining 150,000 is for office. Okay. While the second one said 1/3 of the office expenses should be treated as factory cost, and these office expenses. That's 300,000. So we have office expenses. They said 1/3. So 1/3 of 300,000 said is what? 1/3 of 300,000 will give us 100,000. And they said that is for factory. So it means the balance remaining 200,000 is for the office. Okay, now let's post this item. Now if you're conversant with manufacturing account, the first thing I'll come here is opening stock of raw materials. So this open stock of raw materials 336,500. So the next one we said add purchases of raw materials. Okay, so the purchase of raw materials is 950,000. So if you add them together, so it will give us 336,500 plus 950,000. That is 1,286,500. Okay, and the next thing is carriage inwards. So add it here. Add carriage inwards. That's 78,500. So if we add it plus 78,500, to give us 1,365 million. Okay. Then the next thing is check if there's closing stock of raw materials 245,000. So we said less closing stock of raw materials 245,000. So 1,365 million minus 245,000 will give us 1,120,000. Okay. Now we start adding all direct cost or direct material. So we're going to check. The first one is royalties. So have royalties as 450,000. Okay. The next one is direct factory wages. That's 925,000. Okay. Check if there are other direct costs here. None. So this will give us 0, 0, 0. This will give us 5. This is 7, and this is 13. Okay. So if we add them together, plus 1,375. This will give us 2,495,000. Now this becomes our prime cost. Okay, the prime cost. So from here now, we're going to get our factory overhead. So we have factory overhead. That's the indirect expenses. So we're going to start first indirect expenses, indirect wages, 225,000. So we have indirect wages, 225,000. So check the next one, insurance of factory. Insurance of factory, 250,000. The next one, depreciation of plant. Depreciation of plant, 310,000. Then remember our general expenses that we did adjustment. They said 150,000 is for factory. So have factory general expenses, 150,000. And the next one, office expenses for factory also. So it would be factory office expenses or factory cost as 100,000. Okay. So I think that's all for that. So let's add up. So I have 225,000 plus 250,000 plus 310,000 plus 150,000 plus 100,000. Give us 1,035,000. Okay. So we'll add it to this year. The prime cost will have plus 2,495. We'll have 3,530,000. Okay. So the next thing is the work in progress. So now have here the opening stock of work in progress. And this is a work in progress. Opening stock is 60,000. So if we add it up, it will give us 3,590,000. Okay. So say less closing stock of work in progress. Closing stock of work in progress is 47,500. So we have 3,590,000 minus 47,500. So we have 3,542,500. Okay, 3,542,500. So this amount becomes our cost of production. Cost of production. So it is this amount that will be sent to this other side as the cost of production. So right here, the cost of production, 3,542,500. So that these two will balance 3,542,500. Okay. So the last part now will not be the trading profit and loss account axis. So it will now be opening stock of finished goods. So this is open stock of finished goods, 350,000. So the next thing is to add cost of production. And the cost of production is this 3,542,500. Okay. So this will give us 2,983. 3,892,500. So the next thing is less closing stock of finished goods, which is 285,000. So if we do that, now we're having 3,892,500 minus 285,000. It will give us 3,607,500. Okay, so the credit side will be our sales. And how much is the sales there? 6 million. I'll check if there's return inwards. No return inwards. Okay, so the sales minus the cost of goods available for sales will give us our cost of goods sold, will give us our gross profit carried down. So 6 million minus this will give us 2,392,500. Okay, so that everything boils down to 6 million. So this gross profit carried down, it will be brought down here as gross profit brought down 2,392,500. Okay, so the expenses axis now. Expenses. The first one is our office salary. The first one is office salaries, 315,000. Then another one is discount allowed. Discount allowed is 20,000. Then the next one is the general expenses. We did adjustment, that of office. Okay, so I have general expenses office. So is what 150,000. The next one will be delivery van expenses, 62,000. So I have delivery van, 62,000 expenses. The next one will be office expenses, 300,000. We did adjustments. Office expenses for office is 200,000. So we have office expenses, 200,000. Then advertisement, 65,000. Advertisement, 65,000. Okay, so let's now add up to see. So 315,000 plus 20,000 plus 150,000 plus 62,000 plus 265 give us 812,000. So if we deduct it from 2,392,500 minus 812,000, we have 1 million. So our net profit will be 1,580,500 will be our net profit. So these two will balance. So this will now be 2,392,500. So this 2,392,500. So that's how to prepare the manufacturing trading profit and loss account. Okay. Thank you for watching. Ensure you like, comment, share, and subscribe to this video. Now, please, if you have not watched our previous video, it is very simple so that you understand how we got this format. Look at this video right now. Watch it. It will help you. Thank you very much.